All right, now time for AFEX Commodities update. For the week ended 17th January 2022, AFEX Commodities Exchange recorded a 17% increase in the volume traded, going from about 7.5 million to 8.7 million in the week. Let's hear more now from Femi Kende, analyst structuring and origination at AFEX, with the details. Great to have you.
Great to be here, Laddie.
All right, tell us, what was the activity like in the market?
So the exchange actually experienced a significant surge in the level of activities compared to the previously reported week. For the week we actually saw an increase in the turnover by about 65% week on week, as over 2.8 billion contracts were traded this week. For the volume traded, we actually saw an increase by 17%, as 8.7 million contracts was traded this week. And for the number of deals, we actually saw an increase by 12% week on week, as 664 deals were executed this week. For the financial benchmarks on the exchange, we actually saw a significant surge in the level of activities, or in the returns posted by this benchmark, especially for the AFEX Commodity Index, as the index reported 5.13% week on week to close the week at 506 basis points. For the AFEX Export Index, we actually saw a marginal increase of about 0.68% increase week on week. For the value traded across all commodities on the exchange, maize continued to account for a significant bulk of the trade. However, the trade in soybean, paddy rice, and sorghum peaked for the reporting week, and we also experienced trades in the exports for export commodities like cocoa. For the week, maize actually closed the week with a 2.12% increase week on week, to close at 239 naira per contract. Soybean actually closed the week at 399 naira per contract, which represented a 0.36% increase week on week. Paddy rice closed the week at 224 naira per contract, which represented a 0.19% increase week on week. Sorghum actually closed the week at 239 naira per contract, which represented an 11.59% increase week on week. And cashew closed the week with a marginal increase of 0.84% week on week. However, for cocoa, we actually saw a significant decline in the pricing of the commodity on the exchange, as the commodity closed the week at 1,200 naira per contract, which represented a 7.47% increase week on week. For more information about our report, you could actually check our website, which is www.afexnigeria.com, or you could actually follow us on our social media handles at afexnigeria.com or COMEX by AFEX.
All right, Femi, thanks for that update. But the recent CPI report by the NBS indicated an uptick in general price levels. How does this relate to performance in the commodities market?
Right, interesting question, Laddie. So, as we all know, inflation is actually a lagging indicator showing the effect of economic activities on general price level in the domestic economy. And what is worthy to note is the sharp increase in food inflation, as reported by the NBS, which food inflation actually closed the year with a 7.37 increase week year on year. At AFEX, we've actually observed an interesting correlation between maize prices and food inflation in the country. And this actually shows, or what we've been able to observe is that maize prices actually move in a direction to which the food inflation prices end up moving in the next quarter or so. With this in mind, you can actually identify that maize is actually key to to the typical household in Nigeria, and the continuous upsurge in maize prices will continue to lead to an increase in general price level, especially for food commodities in the country. With this in mind, it shows the looming threat of food insecurity in the country, because, I mean, the use of maize in the country is actually a spread between industrial use to household use. So if the prices of this commodity continues to increase, we know that households will actually continue to accredit more of their income to food consumption, up to the point to which they can afford it. And with this in mind, we think a lot of things needs to be done in order to regulate prices in the country, food commodities prices in the country.
Okay, now, we've been talking about the commodities super cycle there, but how well did, comparable staples perform in the international market, compared to the domestic market?
So, as posted by the World Bank, grains in the international market actually experienced a good year, as in maize actually exceeded about $300 per metric ton mid May. This has the last time this occurred was around 2013. So if you and the reason for this continuous upsurge in commodities prices, even in the international market, was can be accredited to supply shortage, including the increased cost, which can be broken down into the increased cost of inputs, and also the increased demand by China for feeds. However, according to the World Bank, they're actually expecting a moderation in the level of commodities prices in the coming year, and this is in accordance to USDA's forecast for grain production for the year. However, there's a threat to this forecast, as we know that the use-to-stock ratio, which measures supply to relative expected demand, actually is expected to decline by about 1%. So with this in mind, we think prices will continue to move in a upward trajectory, regardless of the increase in production.
All right, thank you for that, Femi Kehinde, analyst structuring and origination at AFEX. Thank you so much. All right, still with AFEX now. AFEX would release its annual commodities outlook report next week. And the AFEX annual commodities outlook shows perspectives on how the 2021 commodities market performed and how the commodities market might perform come right in 2022. Let's bring in David Ibilapo now, senior research analyst at AFEX, to tell us what to expect. Great to have you on the program. Good morning.
Yeah, good morning. Happy New Year, Nadi.
Happy New Year.
Nice to be here.
So how was the year 2021 like for the commodities market? What were the major highlights in the year for you?
Thank you, Ladi, for that question. 2021 was actually a good year for investors, basically. And we're coming from 2020, given the fact that we saw a lot of supply chain disruption induced by the COVID pandemic. 2021, we saw consistent increase in prices, or rally, I would say, across commodities, right? And these commodities actually rose to their all-time highs during the first 3 quarters of the year. And also, we saw a correlation, a very strong correlation between FX movements during the year and also commodities prices, as prices actually rose about 30% compared to 2020. Right. Also, we also saw that some global factors also affected the prices of commodities in 2021. For example, fertilizer prices. There was a rally in global fertilizer prices during the year. According to the World Bank pink sheet data, we saw that the fertilizer index actually rose by 163% compared to 2020. And this was driven by over 200% increase in the cost in the price of urea, right? And we understand that there's always a translatory effect on domestic prices, given the fact that we actually import fertilizers to help in our production processes, right? And also, if you look at in the global space, energy prices also increased, and we saw that translatory effect on fertilizer prices. In Europe, for example, there was a surge in natural gas price, which was as a result of a widespread cutback on the production of ammonia, which is actually a very important input in the production of nitrogen fertilizer, right? Also, we saw a similar trend also in the U.S. Caused by the Hurricane Ida, which also saw that big fertilizer producers had to clamp down on production. Then also we saw in China a surge, a rally in coal prices, which saw China actually ration electricity usage across provinces, and also caused fertilizer producers to also clamp down on production, right? And all of these actually had a translatory effect on commodities prices in our domestic space.
Yeah, and most traders were able to take advantage of that. It's a pity I couldn't. Well, but,
Yeah.
Quite an interesting, but what factors, could typically shape the, commodity market this year? What's your outlook for prices? Maybe another super cycle?
I would say, when I have conversations with people, I would say that the biggest threat to global economies, and also Nigeria inclusive, is actually inflationary pressure. Yeah, we understand that the COVID-19 pandemic and also the Omicron virus variant could actually also pose some level of threat. But I would say the biggest threat will be inflationary pressure. And why do I say this? So in the domestic space, our outlook for commodities is that for maize, for example, is going to cross the 300,000 per metric ton benchmark. For sorghum, cross the 400,000 naira per metric ton benchmark. And so we are seeing continued pressure on prices. And this is actually due to the fact that when you look at our production estimates for last year, which is 2021 in this case, we are a little bullish on production outcomes across major commodities, right? And these production levels are not significant enough to mop up the demand in the open market, right? So we are seeing a lot of heightened demand in the open market, and also we are seeing that traders in the open market are anticipating this price hike and are also engaging in ordering activities, right? So these factors are going to actually push prices further northwards this year. Then also, I spoke about fertilizer prices. The outlook for fertilizer prices is actually bleak. We expect further pressure on fertilizer prices, which will also have a translatory effect on domestic prices of commodities, right? And also, when we look at the FX market, right, like I said, like my colleague also established, we're able to establish a strong correlation between FX movements and commodities prices of major commodities like maize, soybean, sorghum. And also, if you look at the fact that the commodities relatively cheaper in the domestic market, so traders, we've seen a lot of cross-border trades, which has also supported a lot of demand, external demand, competing with internal domestic demand for these same commodities at the given level of supply, which we think actually are major factors that would pressure prices northwards this year.
All right, so, in line with, possible continuous upward trend in prices this year, how does, the commodities market provide solutions to the investing public?
Yeah, that's a very interesting question. Thanks, Ladi. So I would say, right, first and foremost, one of the major objectives for investors when they want to invest is that they must be able to at least gain positive real return, right? That's return that will beat inflation, right? And over the last 3 years, we've seen that the commodity space, investing in commodity space, has been able to return back to investors returns that beat inflation, as against some other traditional asset classes, like the stocks and others, which typically are characterized by negative real return, as where inflation rate outpaces the return that they get for that year, right? So I think the commodities markets can provide an edge against inflation, inflationary pressure for investors. Then also, I think it also provides an edge against FX currency devaluation, or let's say the weakening of the naira against the US dollars, right? So like we said, right, so we've seen a strong correlation between commodities prices and FX movement. And so for every 30% depreciation in naira, we're also seeing like a 25% increase in the value of a maize or a sorghum, for example, right? Then also, we believe also that it will also provide an edge against supply chain issues, right? So when you take a look at across the value chain, so one of the challenges that processors would naturally face is the assurance that they would get the level of supply this year or next year than they got the previous year, right? So on the exchange, for example, we provide products like the forward contracts that can actually help, that could assure processors this level of supply at a given price to mitigate any form of price risk that may come up, right, during the course of the year. And so we think these are actually a lot of benefits for investors. And I must say that beyond even the return benefit, there's also the point where investors are also impacting the lives of households. So we understand that for every pressure in commodity prices, right, there is always the household actually feel the brunt of this pressure, right? So if we are able to stem prices down, also the households also are beneficiaries of that this. And then also look at farmers, input finance notes like products that we provide on our exchange could also provide farmers the resources, the finances to actually procure inputs for their production levels.
All right, David. Well, you know, with rising inflation, you know, globally, everyone needs a hedge right now, David. Thank you so much, David Ibidakwa, Senior Research Analyst at AFEX. Thank you so much. Take a moment now.
Yeah. Thank you, Ladi, for having us. Thank you.
All right.